Hi everybody, Dave Aquino with Basecamp Trading. This is the free video for Thursday, May 7th. So I'm going to look at Broadcom today. That stands for AVGO. For those of you that don't know, Broadcom used to actually be BRCM, and there used to be a company called AVGO. And when they merged, they seem to just have taken they kept the name Broadcom, and they kept the symbol for AVGO, so it's AVGO. That's the origin of this. Now, looking at the chart, we've been pretty bullish since the beginning of April, going all the way from 320 all the way up past 420. So basically, greater than a 30% move to the upside. Now, the reason why I'm revisiting this, because we were watching it on the way up. We saw the resistance at roughly 425, maybe a little bit higher. And when we've come back here, we had a pullback and then a move higher to a higher high. Now this could be just temporary, but I just want to point out the significant bearish divergence on momentum. I think in order for Broadcom to keep going higher, you're going to need a period of consolidation to kind of dissipate this bearishness and then possibly turn the market back to positive, at least on a positive slope, to make additional new highs. Otherwise, I'd watch out for a retracement back to 400. The real numbers are roughly 394 and a quarter. That's the pivot low right there, but 400 is a good target. If it keeps pulling back, then we could potentially use a Fibonacci retracement. That would be from this pivot low to this pivot high. And then the next target would be, I would put it at 380. You have a gravity line here at 371, as well as the 50-day EMA, and then a 50% target at 363.5. So I'm all for being bullish on Broadcom long term, but this move that comprised most of April and the first part of May here, we may be very close to folks taking profit. So be careful. Okay? Thanks a lot.